Hello everyone, how's it going? In this video, we're going to be talking about Palantir Technologies, trading under the ticker symbol PLTR. The company experienced a significant surge recently, rising about 10% during the power hours and reaching an intraday high of $20. So we're going to cover the current price action, the important levels to watch, and also a preview of the upcoming financials and the earning estimates. Before the video begins, if you like my channel, please don't hesitate to like and subscribe, and also to check out the links down in the description. Every purchase, and not just the items in the links directly, that is made using my links, either by clicking on it and or using them as bookmarks, will earn me a small commission. Thank you very much for your support, and let's begin. So, Palantir it is. Palantir stock exhibited some very impressive momentums, starting with a slight dip during the initial minutes of trading, followed by a V-shaped recovery that led to a remarkable surge, up to almost 20% per share. And subsequently, the price pulled back to around $19 range and traded sideways between $19.25 and $50. And as of now, it's rallying with a golden cross observed in the intraday chart. Additionally, a wedge pattern has formed with higher lows and lower highs, indicating uncertainty about the stock's direction in the short term. With a recent rise in value, the market cap of Palantir is now more than $40 billion, which is a very significant increase from the previous levels. The stock has a beta of about 2.7, indicating a higher volatility than the broad market, which is consistent with the recent level fluctuations. Palantir is also gearing up to report its earnings soon. The analysts estimate that an EPS of 5 cents, which shows very significant improvement compared to the negative 1 cent reporting last year. Revenue estimates also demonstrate a positive growth, projecting to reach about $530 million, which is a 12% increase from the previous year's $473 million. The revenue growth has slowed, however, which, it remains encouraging in comparison to other companies in the tech sector. The recent price surge has brought about a potential overbought condition, which could affect investor sentiment heading into the earnings. Although the stock appears to have strong bullish momentums, of course, caution is still advised, as a pullback may be anticipated. Some investors may prefer to wait for a potential pullback to around $18 before considering new positions. If we look at the long-term price action of Palantir, we must ask ourselves whether this company will have a place in the economy of tomorrow. We know that the company will not be profitable for another few years. That much has already been priced in. We also know that Palantir is in a highly sophisticated area of the economy, and that it aims to become the analytic dashboard of the wealthiest entities around the world. The true debate is whether Palantir itself can stand the test of time, and whether the market will believe in its potentials to become something bigger and more critical. Palantir fell by almost 80% from the peak of the share price, from $35 down to $7.28. Much of this is due to the overall market trend, and the rest is caused by doubts on the company's growth potentials, as well as the business model to work with government agencies. Now, personally, I believe that Palantir has been testing its bottom for some time now, as the downward slope stopped the progression for more than 6 months. Ever since the price reached about $8 back in May of this year, the rest of the downward slide is probably caused by the habit of just going lower by default. Does this mean that the stock will reach new high very soon? Maybe not. But on the other hand, I do believe that Palantir will have a place in the future and that its price is due for some significant change as well. Given that it's been down by so much, the only logical direction that it's going to go is going to be up. Palantir Technologies is a software company specializing in providing big data analytics and management solutions to various industries, including finance. The company's flagship product, Palantir Gotham, is a powerful platform helping organizations to make sense of their data by providing advanced data integration, analysis, and visualization capabilities. One of the key features of Palantir Gotham is its ability to integrate data from a wide variety of sources. The platform can work with structured and unstructured data, including text, images, and videos, and can also handle data in multiple formats and languages. This makes it an ideal solution for organizations with data spread across multiple systems and departments. It also provides advanced data analytics capabilities, including natural language processing, machine learning, and predictive analytics. Those features allow organizations to uncover hidden insights and patterns from the data. Another key advantage of Gotham is the ability to provide secure and role-based access to the data. The platform uses a combination of technical controls and policy-based access to ensure that only the authorized users can access the sensitive data. This is very important for organizations in the financial sector, which are subject to strict regulatory requirements for data security and privacy. Palantir's solution is widely used by government and intelligence agencies, as well as by major financial institutions, consulting firms, and other kinds of organizations around the world who can afford it. This is due to the platform's ability to help these organizations to make sense of their own datasets and to identify patterns and trends that could optimize their decision making. Now, as we look at Palantir's financials, the first thing that is noticeable is the positive gross margin. Above all else, this is a decent reminder that the company's core business seems to work. It is true that revenue has been growing slowly, which sparked some worries from investors, but the fact that the gross profit is positive means that the main issue is the scalability and the diversification of its operations, which may solve the problem once they reach a critical number of clients. We gotta remember that Palantir's revenue managed to grow despite the fact that there is a de facto recession in many economies around the world, meaning Palantir's clients are relatively robust, which can be a good thing for the company. The cash flow reports suggest that despite having a net loss due to the fixed costs, Palantir can self-finance significant portions of its operations with a positive free cash flow at the end of each quarter ever since Q1 of 2021. This means that the pressure of Palantir to go through rounds of share dilutions would be relatively low, which is a good thing for the shareholders. Another significant aspect to consider is that its liabilities seem to be under control, currently around $933 million, which is mostly constant and slightly decreasing compared to the previous quarters. This is also very reassuring and suggests that Palantir is also keen on making sure that they have a low leverage, decreasing their solvency risks. There's about 33% of institutional owners amongst Palantir's shareholders. So what this means is that Palantir does have a significant endorsement from the money managers, but they are largely outnumbered by the retails, and that there will be a significant chunk of people going in and out of the stock based on the market movements and the short-term price actions. It would also suggest that Palantir is good for investment, but if we do so, we must be aware of the people who want to profit off the swings, meaning we need to ignore the short-term volatilities. One key behavioral difference is that institutionals can afford to wait longer for their profits, whereas the retails tend to come in and out in very short periods of time because they want to make quick profits. Also, institutional shareholders tend to be more active in corporate governance. They are more likely to vote on important matters like mergers and acquisitions, compensations, appointments, and so on. They're also more vocal in their opinions, whereas the retail shareholders, they tend to be more silent and more passive in front of different decisions to be made. Currently, there are around 4.2 million shares shorting against Palantir. Some believe that there might be potentials for a short squeeze, because those 4.2 million shares would need to be redeemed at some point, and right now it takes about 4 days to fully recover. With that being said, I believe that Palantir currently has a certain volume of short positions because people truly believe that the company has a lot of headwind against it. I don't believe that they are concerted, and they're also not entirely institutional. It's important to note that a short interest is not a guarantee of a short squeeze, but it's a metric worth monitoring for the investors. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment, and a short squeeze may not happen regardless of how many stars are being aligned. So, my conclusion about Palantir is that the company has experienced a very impressive surge recently, reaching almost $20 per share at one point. With a market cap exceeding $40 billion, the company is gaining significant attention from the market. The earnings estimate show a positive outlook, with expected EPS growth and revenue increases. However, the recent price surge has also led to overbought conditions, and investors should be cautious of the potential pullbacks. Therefore, I would recommend to keep a position in Palantir and to make sure to continue buying the shares over the next 12 months to get them at the best prices possible. The overall approach I would therefore recommend in this case is to invest in Palantir shares, not necessarily to be used as a trading stock in the short term.